Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so we were just going over a chart in the group recently, and I decided I'd go ahead and share it in today's technical analysis. Obviously a big day in the markets, as today is the election day in the United States, and we are expecting quite a bit of volatility, obviously leading up to but also after the results come in, regardless of who wins or loses. But definitely the uncertainty would be the biggest catalyst for volatility, as we're a definitive winner. I think would be more likely to see a little less volatility and then potential for a trending move in either direction. So, but essentially, I've just used one of the tools here just for simplicity's sake to kind of map out price action, how I would expect it to happen. What we're paying attention to is this ascending, broadening wedge. Essentially what we have is a rising slope line at the bottom. Turn this off real quick. Rising slope line at the bottom with the resistance, and it's essentially just getting bigger and bigger as it goes, broadening. It's got multiple touches on the top as well as multiple touches on the bottom. Typically when this pattern breaks, what it'll do is, if it's going to break to the downside, it will come down, touch the bottom, retest up to the midpoint, and then come back down to the bottom and then finally break. Or vice versa, if it decides to break to the top, it will come down, retest the heart line, and then go back to the top and then find support and then break to the upside. At this point in time, based on quite a few things, it does look like it is potentially going to break to the bottom on Bitcoin. It is possible, however, though, that we would just get a move back up to the top like this and then retest the heart line from the top and then continue to break to the upside. So we're paying attention to that and always open to it. I am currently short from up in this area, but I took profits on the majority of the position down at the bottom of the range. And then I will potentially enter short again at the heart line, as it looks like it'll show weakness and sell back off. But I put this chart in place ahead of time before we got this move up here. But I'm expecting something similar to this. And the idea behind it being, and this could be like the inverse move to the upside essentially as well, but the idea behind it being it would retest the heart line, come back down, find support, and then fail to be able to break through, fail to be able to move back up off of that support, start to show weakness, and then break through to the downside, come down to the 236 of this micro move right here, the bottom being back here roughly at like 10,000, 9,800, and then come back up, retest, failed to get back into that zone, and then come down to the 236, retest the actual bottom as like a support resistance flip, SR flip, failed to be able to get back into the actual pattern itself, and then sell back off down to the 382 target next. Now at that point in time, we could see bullish accumulation take place and then move back to the upside and get continuation, or we could get a deeper retrace depending on what happens with the economy, world economy, etc. So but that's what we're paying attention to right now. This is typically an area where we would find support at the zero line after a strong move to the upside. We are below the slope line. It is red currently, so we would expect it to act as resistance as we come back up to retest it. So we could get once again a little bit higher here, but we would expect it eventually to start selling back off. We are getting a positive blue slope on the TJD Stoch slope, which is telling us that there is in fact potential for a small relief rally to the upside, or potentially resuming the actual rally itself, coming back up, putting in a new high and retesting the top of the range. And then if we zoom in a little closer here, we can see the RSI and slope of the RSI. The RSI has now crossed back above the moving average. We are at that 50 spot, which is typically once again where we would find support. But you'll notice again that we do have a pattern developing down here as well. We essentially have 3 touches on the top of a descending pattern, as we also have 3 touches now on the bottom of this descending pattern as well. So essentially we are putting in like a slight divergence between the pattern itself and like our actual pattern on the chart. So we are moving up on the chart while we're essentially moving down on this stochastics. So essentially what you're getting is a divergence, bearish divergence. Price action is continuing to rise and put in higher highs as price action continues to, or as the oscillator indicator continues to fall essentially telling us that we're using less energy each time to move the price up higher, as where we would expect these to like coincide. And then once again we have the same situation taking place on the TJD TD MACD. Once again, we have 3 points, one high point, one medium point, and one low point. And here we have one low point, one medium point, and one high point. So that's 3 stabs of bearish divergence taking place there as well. At which point in time we would expect a violent move sell-off, and essentially like the retracement for at least this move itself to take place. So, and then once again, if we do sell off back down to the 382, that's going to coincide with the high of our previous rally, which was the head and shoulders we dumped out of. So that would essentially be like a high, a low, a high, a retest of that previous high as support, and then if that holds, continuation to the upside, which is essentially what we got on the previous move before that. We moved up, put in the high, put in our low, and then came up to a new high, retested our previous high now as our low, and then continuation up. So once again, we would expect the same thing to happen around this 382 area, or else we could potentially like retrace this entire wave. If we decided we were going to if we decided we were going to retrace the entire wave, it would probably look something like this. And then, we would potentially get the retrace all the way down to the 886 of this. Let me put this one in green. I'll put this one in blue. So we would retrace all the way down to potentially like the 886, which would be our 236 of the entire structure. And then, potentially a retest back up, find resistance somewhere in this same area again. Potentially put in like a head and shoulders pattern. That would be essentially our shoulder, our head, our shoulder would come back probably somewhere in the 12,000 range, and then potentially come back down to the neckline. And then if we broke that 236, the measured move of that, and again, this is all hypothetical at this point. It's too far out to tell right now, but it's important to start looking at stuff like this ahead of time to get an idea before an actual move takes place. But that would come back up here, come back up here, come down here, break through the neckline at the 236 right here around 10,000, and then the measured move for that would take us down to the 618, or potentially if we were more bullish we could fall short at the 0.5, which again we find like previous resistance and support at it as well, but the expected move would be like 7250, potentially down as low as 6300. So but again, it's too far out to tell at this point in time, but it's very important to pay attention to that stuff and have an idea what's going on ahead of time. But that would essentially be the retrace of what would look like, a 5-wave structure from the initial sell-off back in March at like 3,800 all the way up to our move here at 14.1, and then the sell back off would take us down to like 6,400, which would give us like a 61.8% retrace of that move. And then after that, we would expect, potential support here, and then continuation to the upside. And this would be our third in a series of higher lows. First was the 3,000 point. Then we have our 3,800 March sell-off. And then we would have like the 6,400, and then, potentially move up to retest the all-time highs. And then, after that, potential breakout, blue sky breakout, and then new highs for Bitcoin. At which point in time we would have to extrapolate the move. But I believe common fib extension would put us near like 25 or 30,000 at the minimum. So but again, that's all way into the future and quite a bit out at this point in time, but I always like to look like way ahead and have an idea what we can expect. That way, if it does or when it does play out, we're not just caught off guard and completely surprised. So but there you have it for today. That is our Bitcoin cryptocurrency technical analysis going into election day. Quite a bit of uncertainty at this time, and again, the best thing for the markets, especially because of the overall correlation between the S&P or traditional markets and Bitcoin, we would expect that a definitive winner is going to be the most bullish thing for the markets, as well as depending on who wins, potential for stimulus, the sooner the better for the overall economy, as well as well, I should say for the overall people. Not necessarily, the stimulus is not necessarily good for the economy itself long term, but for people short term, it's definitely good. And then depending on what happens as well with unrest and the exception of the results and what kind of like issues we have going into the actual changing of the guards or second term, depending on the results. Anything could happen. So we have to be very careful there. This is obviously a very high time for volatility. And once again, we do have a extremely large portion of the population aging out of essentially like the risk markets. Wanting to take money out of different assets or whatever to guarantee that it stays solid or stable for retirement, so that they don't potentially lose the gains that they have made throughout this entire massive run or bubble, whatever you want to call it. But keep in mind that we did have over a 30 or 35 year massive bull run in the stock market, and at any point in time, especially with the fundamentals and technicals lining up like this, we could potentially see a lasting bear market. And again, based on like the overall world economy, based on the condition of the big V, the CV, and essentially what's going on right now going into the winter months here in the United States, it does not seem unlikely that we could potentially enter a long-term bear market, at least for a few years, especially for a few months. Typically, though, I do like to pay attention to the overall seasonal moves, and in general, from Halloween to Christmas or the end of the year is typically bullish, based on not only like past history in the markets, especially on crypto, but also traditional stocks as well. But also, we have like essentially like the Santa rally going into the end of the year. We have a lot of people away from work, spending more time on the charts, essentially like putting more time and energy into like assets and trading and investing and all that stuff. But again, this may be a different situation, and we might have quite a bit of the population caught with their pants down, just going with what has previously worked in the past, as opposed to going what the charts are telling us, or what looks more likely based on our current technicals and fundamentals. So there you have it, guys. Crypto Trend Trader, and I'm out of here.